Greetings of the day. My name is Lakshman Jajati, Assistant Professor, GS College of Commerce, Varda. In this video lecture for BCom first semester Financial Accounting, we will discuss a short problem related with the calculation of net premium as well as balance of fund. In the earlier videos, we have seen in detail how we should prepare revenue account, how P&L account is being prepared, how balance sheet is being prepared. Even though in the we will see how full-fledged question for 16 marks can be solved regarding to the general insurance company final. In this video lecture, we will see in detail how the net premium are to be calculated. These types of questions can be asked for in the short form or in the short marks question or short questions. It may be for 4 marks or 8 marks. Even though in the MCQ pattern also few things of these questions can be used to be asked because the questions are relatively simple. The things which we should add, deduct are quite simple to understand. That is why we are having this particular question. So for the purpose of viewing the question, kindly click on the description box link where question has been attached for seeing it. Solution will be found by us here in the lecture. So the question says that a premium amount related to the company of general insurance has been provided to us. We are being asked to calculate net premium and provide balance of fund, that is reserve for unexpired risk at 50% and additional reserve at the rate 5% of net premium. In the question, two types of business are being given with regard to the premium of the company, that is direct business and reinsurance business. So we will start with the preparation of solution side by side. Pattern solution with the heading calculation of net premium. With regard to it, first thing we would take would be the premium received. It would include both the premium. First one from direct business, second one from reinsurance business. So from direct business, company has received rupees 10 lakh, whereas from reinsurance they have received rupees 80,000. Hence total premium received during the particular period by the company is of rupees 10 lakh 80,000. In this, what we usually have discussed earlier, that what should be added and deducted in premium, we should add closing balance, whereas opening balance should be deducted. Remember this formula. With regard to claim, this formula will be followed as it is. We can even write premium oblique claims. Similar formula would to be used. So premium received 10,80,000 plus closing premium receivable from direct business 80,000, from reinsurance business 12,000. Therefore, total closing receivable premium is of rupees 92,000. Third thing, what we have to take, we have to deduct opening balance of premium receivable. So from direct business, company has an opening balance of 60,000, whereas from reinsurance it is of 8,000. Hence we have to deduct rupees 68,000 from this. Apart from that, we are being given with the premium paid by the company, which amounted to rupees 1,20,000. Along with this, there is again opening and closing balance is provided with regard to the premium payable by the company. So premium payable closing balance is of rupees 14,000. As it is to be added, therefore 1,20,000 plus 14,000 is equals to 1,34,000. We have to deduct premium payable opening balance, which is of rupees 10,000. Hence in the inner column, what we have done, we have added premium payable plus premium paid closing, that is 1,34,000, less premium payable at opening, that is 10,000. Hence the total would be 1,24,000, which should be deducted again because it is being paid by the company. Remember one thing, here we have received the premium, but here we have paid the premium, that is why we have to deduct this. Therefore 10,80,000 plus 92,000 minus 68,000 minus 1,24,000, the amount would be 9,80,000. 9,80,000. This is our net premium income from the particular general insurance business. This is how we have to calculate the premium, and similar would be the pattern for claims also. Second thing which the question has said to us for the purpose of calculation is balance of fund calculation, that is reserve for unexpired risk as well as additional reserve. What we have said that whenever an insurance company is engaged in general insurance, they have to create 50% of their premium as an reserve for unexpired risk. But except what we can say marine business, for the purpose of marine business, this percentage is 100%. In this particular question, what we have been given, we have been directly advised to create at 50%. It means that company may not be dealing with the marine insurance. But remember one thing, as marine insurance business carries much large risk or huge risk, that is 100% of net premium is taken as a reserve for an expired risk. But in other insurance business, for general insurance, we can take 50% of our net premium. Net premium what we have calculated, 9,80,000. Therefore, 9,80,000 into 50%. 50% of 9,80,000 is 4,90,000. That is reserve for unexpired risk. Second thing, additional reserve. With respect to additional reserve, what is the information provided? 5%. 5% of what? Again, net premium. Net premium was of rupees 9,80,000 into 5%, that is 49,000. This is what is the total balance of fund which we need to create at the end of the period. This is how we need to calculate the net premium and balance of fund. Remember thing, marine business, in insurance, 100% of net premium for reserve for unexpired risk, whereas for others business it would be 50% of net premium. This is how we need to calculate the reserve for unexpired risk in the case of marine and in the case of others. For marine 100%, for others it would be 50%. This is it for this lecture. Till next lecture, stay tuned. Thank you.